We're going to look at the stock market analysis and projections. Of course, important information. This tells you about our approach to analysis and how you use that, and of course, the important aspect of trade ownership. You need to own your own trades, no matter what anybody says about anything. It's got to be yours. That's one of the keys to success. All right, this is the market brief for this week. There's not a lot to say except for the indexes have small gains still. They're at around 12:30 p.m. Eastern time. That's after a very negative Monday. And then what was for like 3 days in this morning of a good upside rebound. The decline came on news about tariffs. The bounce came on news about tariffs as Mexico and Canada got 30-day delays. So overall, that big down Monday and the decline today as a net of a tiny little gain in the indexes. Earnings were pretty mixed. When you look at Google, Amazon, and AMD, I mean, these kind of market leaders, they had very big drops. And the reason is because of their forward guidance, and that comes because of their CapEx. They're spending a lot of money on AI. And it's those that need to buy the AI that are having a problem. Those that supply the AI are the ones that did so well. And until, of course, DeepSeek came out and they started to look really hard at these particular leaders that led the market up so far and that had so much future earnings priced into them, and they started to come down. And we see a lot of weakness in NVIDIA, which was, of course, the key supplier of GPUs. So right now, the market is in a rotation, which is holding stocks near the highs, but very choppy. And I'll show you that on the chart. But we're in a range that is persisting. Last week, I said the best way to probably trade the market is to trade the range, look for the bottom of the range and be a buyer. And we saw how that worked on Monday, and look to the top of the range and be a seller. And we see how that worked here today. So as the market reversed back to the downside. But new leaders may be emerging. A rotational market and a market where the leaders lose their energy, if that kind of a market continues to be a positive market, then it's going to take other leaders to move the market up. Earlier in the show, I showed the analysis on some of the metals. I did not do copper. Nobody asked me about that one, but copper had a giant breakout. And I'm going to show you SCCO and some other metal stocks that look like they could be new leaders and very worth looking at for position traders, a little longer holders, because they could be setting in a bottom and could be some of the next leaders. So I'm going to show you that. So essentially what I'm going to bring you as we look at the stock market is a look at the S&P 500, the SPX. We'll go back to the MCM, which Matt just showed you. I'll take a little more in-depth look at some of those stocks that are positive and negative. And then I'm going to go into this mini stock sectors and show you the weekly analysis on 4 stocks for this rotational market that you may be interested in accumulating slowly here, because the bottoms are not certain, and then look for put some potential upside movement in here. So let's take a look here as we switch over and look at the stock market. So this is the S&P 500. We're going to look at the weekly, we're going to look at the daily, and we're going to look at the 2-hour, where we're getting all the information. So let's be very clear about this. The weekly and the daily work very closely together. We get the information from the multiple time frames. And those can be in conflict sometimes. And at this point, well, they're really not. Then when we look at the shorter term and we try to figure out, what a shorter term trader would be doing, we'd be looking at the daily and the 2-hour chart right over here and getting the information off of that. And we have on here our proprietary indicators. This is the option bias indicator right here on the a daily chart. This is the slim ribbon PO on the daily. Here is the slim ribbon PO on the 2-hour chart. And this is the askSlim market condition indicator, which is moving up again and is up around the 63 level. Now, right in here, there is a a 25 and a minus 25. That's the key swing zone. As long as you're above the swing zone, you're in positive condition. If you're below the swing zone, you're in negative condition. So, and that gives you great sense of feel for the market. When it gets into the swing zone, then you start to look for, what's going to happen from there. If it moves through, it's a very, very important message. Let's take a look at the weekly chart here on the S&P 500. So there's some high waves going on right in here where the market is rejecting this extension zone that we have had in here. So let's just look at the dominant and minor cycles that are in here. So here's where the minor cycle bottomed right here. This was the kind of hissy fit over the yen on that break. Here's where the dominant and the minor move together in a very small pullback right over there, which is very unusual. Usually it's something bigger like over here. This one at least was close to 6%. This was only 3%. That is almost imperceptible, not tradable, certainly. And I was looking for something deeper right in there. So I'm sure traders were thinking, well, I didn't get that one right. Well, I didn't, because the highest probability would be it would fall larger, but the smallest probability sometimes happens. So that's what it went in there. Now you can see in here the momentum as it came up in here and you got into this minor corrective phase. Well, it came down, but then we saw this upward turn right over here curling up. It's not very strong as we look at that, and it seems to be having trouble over here. Now, if you watched my year-end show, members would have seen where my upside projection was for the year, which is pretty much where this solid blue line is right over there. And that it's not very far. Now, if it got through there, then the next level is right over here around 62.90, where it possibly could go to if it got through the level that I think it's going to stop. Right now, this is positive. This says we are in this rising phase. It's having trouble in here. So essentially, when you have a mild upside momentum in a rising phase that is meeting the resistance area, it squeezes itself, it chops. And then you have to really ask the question, is this a distribution area that's going on, or is it a consolidation area? My guess it's distribution, but I want to believe that this area right over here is going to have a very sharp decline in a bear market into the middle part of this year. Sharp decline, I mean a correction or a potential bear market. That means like 10 to 20% out in this time frame. But that's just my gut feel based on what I see right over here. The market doesn't say that, and we don't say it's time to sell. Right now, positive momentum on the weekly. I say that to you because I don't want you to see these downward motions over here and say, that has to be a big decline. It doesn't. Or this one right over here that says it has to be a big decline. It wasn't. So that's important that you understand. These are just drawing tools that give us a sense for the rhythm in the market. Everything else is what we use to be able to give us a sense for the real conditions of the market. And these real conditions are still positive. The cycles are positively configured, positively translated, and that is continuing right now. Positive conditions on the weekly. Here's the daily right now. And what we're looking at is this minor cycle rising. And look at the chop that's in here. You had this big downside break on the DeepSeek. You had this big downside break right over here on the tariffs. And each of those happened while momentum was still strong. You can see the slim ribbon positive, the option bias indicator positive, slim ribbon PO on this day right over here, giving a signal that said upside resumption, which is remarkable. And the reversal scout still pointing to the upside right here. So momentum is still strong. What is this line, this downside line right over here? Well, that just tells you that there is a completion to this cycle right in here that's likely to happen. It could be that it gets down to a very high level, which is just under 6,000. That's not very far on the downside, 59.94. This one right over here is 59.54. That low right over there was around 59.22, and that support is around 59.10. So you can see in here between this area of 59.96 and 59.10 is likely where there's a completion of this cycle in here, and then we get to the next area. Well, if you're you're a very short-term trader or a day trader, maybe this says to you that you can take some short side trades, but you're taking short side trades against positive momentum on the intermediate holders, short-term holders in here, people that are still buying. And right over here, the 2-hour chart, which is still green, it hasn't turned down yet. So we don't have any bearish signals in here right now. We have just simply signals that say, and analysis that is pretty clear, that we are in a sideways choppy correction right over here under positive conditions. That says to us that once that's over with, wherever it lasts, wherever it comes down to, somewhere in here, we'll then get into the next rising phase right over here. So what are we looking at? Are we looking at a reason to sell if you're a short-term or intermediate term holder? Or are we looking for a place that we would start to get more onto the long side bias? Well, when I look at this, the analysis says to me, positive on the weekly, right over there, positive on the daily over here, probably in some kind of a corrective phase that's existing right in this period right over here. And then even the intraday, which is having a hard time turning down, well, this doesn't say to me I want to be a seller. This says to me that I want to look at a positive market that ultimately, and you can see in here, this is the MDY, which is right there. That's going to be pushing to the upside also, and there's your rotational condition as you start to get mid caps leading the market to the upside. All of this says corrective process going on, likely to have some kind of a pullback that isn't really that significant, and then the market resuming back to the upside, and maybe even making my upside projections, up in the high 6100s or 6200 in this rising phase right over here. Then you get into a period where you're likely to get a bigger corrective process, but the market will have to tell us when we get into that. I'm just showing you how the cycles could possibly resolve. We're nowhere near that yet. So that is a look at the S&P 500, and that really gives you a good sense for where we are in the stock market regarding all of our indicators and regarding the cycle formations, the translations, the configurations. All of those, by the way, are in the glossary in our cycle analysis workshop, and you can really learn a ton about this style of analysis by investing in that workshop. So now we're going to take a look, and we're going to switch over as we look at the market conditions monitor, and Matt showed this to you earlier in the show. He had a lot of focus on the near term, which is a little shorter term. I'm going to focus more on the short term. So the near term is kind of intraday, like 1 to 3 days. The short term is probably more in the 1 to 2 week area, 1 to 3 week. And we can see in here that our indicators have not yet even turned down. So when I look at that, that is very much in alignment with what I just showed you. Even right now, you have to see if I can do force an update and see if that changed as the market turned a little bit weaker. And it should automatically update. So yeah, you see they're still just the same. So what we have here in the short term is that the diamonds on the 2-hour chart are the only one that went neutral in this downside move today. So that tells you that the market has, even with this 40-something point decline that we see in the S&P 500 right now, it's not enough to get us into what is this corrective period that we're talking about. On the intermediate right over here, you can see that, well, looking at the longer term, they are all very bullish. There's been no change in their and they have been all set to very bullish for quite a while. So, and upticking from bullish. So they were bullish before they went to very bullish for the intermediate. Let's go back to the short term just to get a peek at what these different stocks look like right now. And we'll look in here at the trade setup condition, which we can scroll on. And I'm just going to move down here very slowly on here so you can get an idea of the stocks that are very bullish for the short term. Again, this is for like 1 to 3 week holders that are in good condition. The Chinese stocks have really turned up. The European stocks have really turned up, as you can see as I move in here. So you have BABA as a stock that is in the Chinese stock category that's moving up. And you can see as I move up through the very bullish ones right over here, and you can get a good idea. Those are the stocks that are really very powerful by our read right in here. See Starbucks going to new highs, the bank stocks, JP Morgan moving to new highs, the ones that are staying very strong. Walmart is just absolutely remarkable. And look at all of these stocks that are just in very bullish short-term conditions still. So that's a look at that. Let's just switch this over to the very bearish conditions, and there's not many that are in here. Wynn, Las Vegas Sands, AMD, and then these other ones are bearish that you see right over here. And you can see that there's quite a number of them there. So I wanted you to see the ones that are bearish. Again, the change log in here will tell you the ones that change based on the short-term condition. If I were to go to intermediate, then the changes on the change log are about the intermediate condition. So this is a fantastic application. And you can use this for your trade planning. You can use this for really for your longer term holdings if you're looking at stocks that are on the move but wondering about what the condition really is. You can look at intermediate to get a better sense for the stocks that are strong or weak for the longer term. So that's a look, I think, at the very, very important market conditions monitor, which is so integral to the work that we do. So I'm going to switch over right now. I just want to do a little look at some stocks. But before I do that, I want to remind you that our level 3 trial is on right now. And it's not gonna last for very long. It's 50% off, only $59.50 non-recurring. We gave a pretty good review of that earlier in the show, so you can go back and look at that. And if you want to sign up, go to the top of the website. You see that special offer, 50% on level 3. And you can sign up for that. So that's just a fantastic offer. You're going to get so much education. For me, 50 years at this, and I really poured my heart out into the teachings in those videos that we have. There's over 1,000 videos in our library, and that's included in this. So you can sign up for that. And I'll go back to the part of the show where we demonstrate a lot that's in here. You'll love that. All right, stock market, market condition monitor. Again, I want to remind you that's included in the level 3 service, level 3 and 4, and you don't need any special platform. That just comes in through our website.